And the mortgage market is wild these days. The last couple of days, we've been talking about interest rates, and we will do that here. We are talking about mortgage demand exploding higher. You've heard me call for the housing crash in transactions to be over. Well, we've got Matt, the mortgage guy, and we're going to talk about what's going on in his business. Has anything changed from November, December to January? We're going to talk about rates. We're going to talk about first-time home buyer programs. There's just so much going on at the start of the year. Matt, how you doing?
I'm doing good, Mike. How you doing?
Oh, it's crazy. I got to imagine your world is very different January 18th versus December 18th. I have to imagine last year, this or last month, a little bit of slow, right? Heading into Christmas,
Oh, for
all of that.
sure. Yeah, people backed off a little bit, and some buyers, there wasn't inventory was a problem for a lot of them, so they just said, no. And I even reiterated to them, most people aren't going to list between the week leading up to Christmas and between Christmas and New Year. So if you're looking for something new that you haven't seen, maybe you press pause and restart at the beginning of the year. And restart they did. I just saw a stat, Mike, that like week over week applications ending last Friday, the 13th of January, were up like 27.9%.
Yeah, 28%. Yep, I did.
Yeah. And so applications are up, numbers don't lie. I talked to a bunch of different people over this past weekend to kind of solidify what I thought I felt in my own personal business, which was number of applications we personally took nationwide was the highest number I'd had since middle of October. So, a 3-month, high for my personal business,
Right.
which, sometimes it could be other factors, right? We're holding more home buyer seminars. We're doing more with real estate partners, but
marketing's working. Yeah. You just never know, right?
It feels like, there is some buyer demand back in the market. Oh, by the way, it doesn't hurt that rates have trended down, and we're probably looking.
I want to poke at that a little bit because I don't think people realize, in October, rates were 7.3, kind of the average rate. As of this morning, I just got an update from Logan on his Twitter feed, or Logan Matsushita, I think his name is. And he said
that butchered it, but it's
I tried, dude.
Logan, I can't do any better. Logan M.
Logan M. Yeah, exactly. Been on my channel a couple of times. A wonderful guy. He just showed me a quote: mortgage rate 6.03.
Right.
We're getting to a 5 handle.
Yeah, for sure.
That's roughly speaking, that's a 1.5. I put out a note or on my daily financial news the last 2 days, and I've had agents and mortgage brokers saying I haven't quoted a rate above 6 in a month. Right? 2-1 buy downs, paying a point. One broker this morning has already replied saying I'm quoting 5.5 with less than a point. I'm like, man, the mortgage market has changed.
Yeah, for sure. And that's the thing too, is that if the 30-year average is 6.37 or 6.42, people are going to spend a couple grand to get a 5.99. They're going to get seller credit. They're going to pay it themselves. And so now that it's 6.03, you're going to have people paying to get a 5.5, paying to get a 5.25. Some of these people are going to be going 3.5, 4.5, 5.5 on a 2-1 buy down. And so, posted rate isn't even as good as it really is. And, it's crazy to think. I literally was on a call this morning, Mike, talking about protecting your loans you closed 3 months ago from a refi. People are going to refinance that stuff because it's that much better, right?
It is.
If it goes from 7.5 to 6, if you owe any significant amount of money, 1.5% is a big deal.
Oh, no, believe me. I mean, over the years, I would do a refi. If I was down 1.5, certainly 2 points, I'll refinance that loan. Absolutely, I'll recast it. Don't take any money out. My payment collapses.
Right,
so
yeah. I mean, I always do quick math for people. 400 grand, 1.5%, call it 6,000 a year in interest savings.
Yeah, it's $500.
$500 a month. Someone who's going to pay probably 3,000-ish in true costs on that. You break even in 6 months. It's a no-brainer.
It's a slam dunk refi. If you pay back the refi costs in 6 months, refi the loan. That's just simple math, right?
And so this rates coming down, I think, is probably more important than the fact that it's the beginning of the year. More important.
No, I agree. Absolutely.
Yeah.
Oh, I think it's all about rates. I think housing is and has always been an affordability process. I think late last year, Q4 of last year, we had the worst affordability except for 1980. 1980 is the only year in my 52-year spreadsheet where it was worse than 2022. 2022 was horrible. End of Q4, horrible. It just was. It was horrible. But now we're a point and a half better. Prices are down a little bit. You know, Case-Shiller says they're down 2% or whatever it is. But the real key, and this is what I wanted to ask you, is there's not one housing market. Even in your market, which I'll pick on Sacramento because that's where you are, I would argue there's at least 3 markets. And this is what I think is going on, and I want to hear from you. I think the luxury market is still dead, defined as 2x the median. Stock market, people are concerned, jobs, not moving. The move-up market, which I consider the median up to 2x, still pretty slow because you're not getting that, I'm selling this and buying that because the rates are down, but they're still not that good. The market that is on fire today is median and below. And I think the market's bipolar. I think luxury is ice cold, and I think median below is on fire. I think the inventory, one of my agents that I talk to every week, I had him break it down. Like he was in his MLS and we broke it down. And I don't know if you have Sacramento, but maybe you do. But median price and below in the high desert, which was the market I talked to, there were roughly speaking 600 pendings and 220 active listings. That's just wild. That is a hot market.
Right.
So I think most of the country is seeing that, where if it's first time entry level, cash flow rentals, hot, getting hotter. As rates fall, that will get hotter. As the government announces new programs, I hear about FHA doing this and doing that. It's only going to make that first time home buyer stuff hotter, but luxury probably broken all year. What are you seeing?
Oh, for sure. Yeah. And, for, simple numbers sake, let's call Sacramento 500 grand, and below is hot and multiple offers, right? Like
multiple offers hot. Exactly.
It's interesting to me because there's this weird dynamic of like hot, but soft. I don't even know how to explain it, but you still have some negotiating power, but you've got 3 or 4 people trying to negotiate on that 350, 400, 450 purchase price. And then as you move up, the higher you move, the worse it gets. Move up buyer is probably like 750 to $1 million, or even like 7 to $1 million, 700,000 to $1 million. And then above that, like the stuff just sits. There's so much stuff that I've looked at where it's like 185 days on the market, 211 days on the market, where it's like 1.79. Sure, your neighbor sold in January of 22, but for that much money, as much as people want to believe that that's, some Hollywood elite that's buying it all cash, those people still use financing. And if they're using financing, their cost of capital went up by $3,000, $4,000, $5,000 a month on that mortgage. And so there's no way they're paying the same price that somebody could finance it at 3% was able to pay in February of 22.
No, exactly. And again, that's why I think a lot of the market's going to be distorted. A lot of these metrics are all market wide, all of that. Again, as a real estate channel, I want to remind people, as rates fall, the first time home buyer market, which I will target as the median for your area and below, is on fire. The move up buyer market doesn't really get kickstarted, in my opinion, unless rates get to 4.5. They get to 4.5, we can start talking about that. And luxury, I think, is broken all year. It's just broken. Lastly, I want to talk about interest rates. One of my crazy calls for 2023, I did 12 housing forecasts. One of the ones that I got the most heat for is I said that the average 30-year mortgage rate would average under 6% in 2023. And I said this when rates were 7. And I got a lot of heat. Do you think there's a chance we're sub 6 this week or this month?
Yeah. I mean,
it's crazy.
If we're 603, we're sub 6 by the end of the week. And so like you've got a really good looking bet. Like the 10 years down to 339. Barry Habib, listened to him this morning, is doubling down. He's all in that by May we're going to be at 5%, and not a straight line, but we continue to follow the path that was kind of laid out where, rates are trickling down. The 10
Yeah.
years coming down, that spread is going back to normal levels. And that for sure, me and is going to have a huge impact on demand. And like the fear that I have is that demand gets driven up and we still don't have supply. I saw something else this morning about home buyer sentiment. They're
Up. Yeah.
Home buyer sentiment has changed. And so like if we've got
Dude, home builders are up.
Yeah.
I saw that this morning.
We
Crazy.
need inventory somewhere. And so it's like all the press pause builders, all the guys that like, hey, we've got these lots, but we're not going to build on them yet because we don't know what's going to happen. Like, please start building. Like, demand's coming back.
Yeah, it's crazy. So again, folks, it is always about affordability. Rates are down almost 1.5. They seem to be trending lower. If they get to 5% by May, that entry level, like, just think about this for a minute. Rates trend to 5% by, let's call it June, middle of the year. The federal government announces some kind of housing first-time homebuyer program, tax credit, a discounted whatever, and we have no supply.
That creates a lot of upward pressure on prices. And like
at least for that segment, yeah.
Right. And really I'm on the side of the buyer. I'm rooting for flatness. I'm rooting.
Yeah, I want flat. Yeah.
Do away with double-digit home price appreciation because it's not healthy, right? But that being said, like there's just economics that happen with supply and demand where you can't help it. So that's another video we should make, Mike, is like the humongous uptick in government loans, FHA and VA. I'm having a lot of conversations about that. Those numbers are going to be astronomically higher than they've been the last couple of years.
Awesome. We will do that next. Matt, before we go, where can people find you if they want to reach out and see what rates are, what they can use? Because your team is awesome.
Go to greatmortgagebroker.com, fill out the form. We're licensed across the country, so no matter where you're at, fill out the form if you want to get pre-approved, get some good advice, and we're happy to help.
Thanks, buddy. Appreciate you.